Okay, so I'm back. So I have, let me just reiterate the case study that I want to talk about real quick. So I have a young male, perfectly healthy, 35 years old, basically looking to purchase around $750,000 worth of life insurance benefits to protect his family. So, we usually look at a term policy to give you the most benefit for the buck. Generally, it's a temporary type of need. So, this is a common type of product that most people look into. But what most people don't realize is, they're always looking to shop for price. I want the least expensive coverage, to get me the most amount of benefits. But what most people don't realize is what happens after a term period is up, or what really makes the difference between going from one carrier to the next. So in this actual case study and product review, I'm going to talk about Protective Life's Protective Class Choice term policy. And then they also have a custom term, which is the newer product, which I'm going to show here in a second, how that compares to the old school term policy. So just looking at what the cost would be for this person to get $750,000 worth of term coverage to protect them for 30 years, we're looking at around $710 a year annually. Okay, so you can see here, age 36 now, here, first year into the policy, you're going to pay the same $710 every single year until you hit that 30th year. Now, what ends up happening with a standard term policy is after that term period is up, and if you haven't converted it, which we'll talk about conversions and so forth in another video, if you haven't gotten out of this policy or passed away, what's going to happen is it's going to turn into what's called a 1-year renewable, which means every year they're going to look at what your age is, what the cost of insurance is for a person at that age, and then they'll redetermine what the cost of that policy would be to continue with that original death benefit. So in this case study here, we're looking at that same $750,000. So at age 66, okay, when this person most likely will have still a long life to go, right? On the 31st year, that $710 premium is going to go up to over $3,000 a year for that same $750. The next year, it's going to go to almost $10,000 for that same policy, and so forth. So at age 70, just to give an example, you're at $23,000 a year plus in order to keep this policy in force. Now, why would someone want to choose or have to choose to keep this policy enforced? Well, what ends up happening with a lot of people is their health at that age gets to the point where they can't get out of this thing. And a lot of times that's what these term policies or carriers hope, is that generally the person is not eligible to qualify for anything else, number one. And number two, they'll keep continuing to pay for this policy, but most likely what they're going to do to keep it affordable is they're going to start reducing that $750,000 to make it affordable, okay? So as you can see here, this just gets totally ridiculous to keep that coverage out to say age 80 or so. Okay, so what would the newer term version of, or the newer type of policy be that you would look into if, this here is not attractive to you? So we go to the newer version. Okay, so we're going to take the same kid, right? $750,000, same death benefit out to age 30 with Protective's custom choice policy. And you can see here that the premium's a little bit more money. So it goes from $710 to $832 a year. But here's where the magic happens. So we got, paying premium. This particular option, you're able to convert to a permanent product up to the 20th year or age 70, whichever comes first, versus the other option, you're only able to convert it for the first 5 years. And then you're very limited on the options, converting it after that. But let's just scroll down past to see what the total premium would be during that 30 years. You're looking at around $24,976 guaranteed up to that 30th year to keep that $750,000 in force. Now, what's neat about this particular option is instead of forcing the premium to rise and you most likely either having to drop that policy or reduce that death benefit, it goes to a reduced death benefit per this schedule. Okay, so you can see here that the premium doesn't change, okay, and it does not change all the way out to age, let's just see, age 96 is when it starts going up. And you can see here on that 31st year, instead of that death benefit, having to be reduced or you drop this plan, now you have the same premium and your death benefit is reduced to $216. Okay, and you can see every year per this schedule, your premium stays the same. Okay, so it's very easy to manage, and your death benefit is going to be reduced. Okay, now just to kind of give you an idea of what it would cost for an 80-year-old that would be healthy enough to purchase, say, $50,000 worth of coverage, because at age 80 with the custom, we're looking here at around $52,000 would be the death benefit. If we were to run a quote on a whole life product, which is something that would go from, say, that age 80 out to age 121, most likely when this person's going to pass away. Again, if they're healthy enough to qualify for it at that time, you're looking at $7,368 a year if the person was able to qualify for $50,000 at that time. Okay, so how do we finish this up here? If you're looking for a temporary need, maybe cover mortgage while you're young, you have children, you're looking at covering loss of income if you were to pass away, leaving some income behind to your spouse, and you're looking into a term policy, make sure you understand, how you can get out of this thing if you want to go ahead and keep it, and what happens to those premiums if you do go ahead and keep it. Because the last thing you want to do here is try to keep something afloat that you just can't, and you end up paying for that insurance when you can't keep it, or you have to reduce it. Or, wouldn't you rather be comfortable knowing that whatever my options are, I'm able to still afford to have some kind of insurance in place, my premiums are the same, and I have a bunch of different exit strategies other than dying, okay? So again, here, Chris Banner, thanks for listening. If you have any questions or you'd like to learn more about how we may be able to help you here, give me a call. My phone number direct is 203-528-1214. Take care.